fun to be here. I think the best way to kind of start off is I'll introduce myself, and then we'll kind of go down from Saeed. But my name is Ben Weiss. I'm a crypto reporter at Fortune Magazine. And yeah, we're here to talk about new financial vehicles. So Saeed, do you want to go?
Saeed, CEO of Wormhole Labs.
Guy, the founder of Ethena. Hello again.
Stani Kulechov, founder of Aave, which Aave Labs is part of. And Aave is a decentralized financial protocol for lending and borrowing with 35 billion worth of market size today.
Cool. So I think the panel is titled New Financial Vehicles. And I think, especially in crypto, a new financial vehicle is very much circumscribed for what's happening in politics and regulation. And especially now, we're having this conversation almost 60 days into Trump's new administration, especially following a couple of blockbuster announcements, including the Bitcoin reserve, et cetera. I think I kind of wanted to open it up and get everyone's take about how this new admin is either potentially accelerating or deaccelerating the expansion of crypto, the adoption of crypto, et cetera. So I don't know, Guy, why don't you go?
Yeah, sure. I think it was interesting in Q4 because I think we ascribed a lot of optimism in terms of what was going to happen, and I think people were front-running a little bit without sort of knowing exactly what the plans were. And I think we've obviously seen a bit of cooling off from that enthusiasm more recently, but I think...
Why is there cooling off, you think?
Well, I just think there was too much optimism baked into what was going to happen before without any real details sort of being shared. I think everyone knew that they were going to be supportive, but what that actually sort of translated to in reality was an open question. I think from our side, it's obviously extremely encouraging that they are engaging in so many different ways, especially with us building on-chain or within DeFi, sort of seeing some of the work or at least effort that they're putting into actually engaging with stuff like World Liberty, for example.
Yeah.
I think it's quite crazy to me to even see a headline that they know what DeFi even is, I think, at that level. And yeah, I think all of the news that's coming out is extremely positive. It just takes a longer time than people want. I think within crypto we have short sort of time horizons and expectations for how quickly things
Price
get done.
come up,
Yeah,
happy.
And it's been nothing but positive headlines in terms of actually engaging. Yeah.
And I think especially because we have you and Stani here, the question for DeFi is interesting from this administration because you haven't seen the necessarily actions from them, at least on the policy level, approaching kind of the DeFi question. But Stani, I'm curious, what your feelings on this, especially as somebody who's, one of the DeFi OGs, so to speak, in the ecosystem.
Yeah, I think obviously the atmosphere is definitely going to a bit more better direction. And if you look at just a few years ago when we started to build Aave and one of the first primitives in DeFi started to actually emerge, it wasn't really kind of a great atmosphere to innovate. So deep down, a lot of builders in our space really think about this technology as really empowering because the access and equal opportunity it gives to all the users and the transparency it builds. In some ways, it's a new financial infrastructure that is just better, faster, stronger, and more efficient and transparent. So in the previous years, it's been pretty hard to build in a way that you have the confidence of actually governments backing the technology that you're building. Even in our kind of a small DeFi communities, you could definitely understand that what we're building is the future and this is what people need. And I think we're now going towards the direction of DeFi is acknowledged on governmental level. But of course, it's still a little bit pushed aside because a lot of the regulation and focus is still more on the centralized side, centralized stable coins and so forth.
And I think that's an interesting point. Maybe I'll kind of pull in Saeed on this, is that we are seeing in this current administration, this current kind of policy atmosphere, perhaps some cracks appearing, in this kind of crypto political support mechanism, right? It's, before it was all anti-Gensler, but now Gensler's gone. Maybe we're seeing some kind of push and pull between the centralized exchanges and from DeFi. And I'm curious, Saeed, where do you see kind of a coalition of crypto, especially because you're an infrastructure guy, so you're literally a bridge, right? Do you see that coalition maybe breaking up in some ways?
I feel like crypto like has a good, historically, like crypto disappoints the optimist and the pessimist, right? In different points in time. And
Which one are you? Optimist or pessimist?
I'm definitely an optimist, but if you ask the optimist, like this is the best time it's ever been to be in crypto. And if you had told me 10 years ago that the president of the United States is going to issue an executive order for a strategic Bitcoin reserve, I would have laughed at you. So like that's amazing. Even though the industry kind of reacts to it and being like it's not amazing, right? But it actually is pretty amazing, and it opens up the kind of political avenue for Congress to act and solidify that as an act of Congress. That's what the industry is looking forward, and it's constantly always looking forward, right? The pessimist is like, this is crazy. I would have never expected crypto to become such a major part of the mainstream conversation about finance and global trade, and governments and leaders of governments are all strategizing. So I would like separate it between two different sectors, right? You've got the DeFi sector, and then you've got everything else, right? You want to call it centralized, you want to call it traditional, you want to call it government. Like if you separate between those two, like extremely optimistic on the centralized and that side of the house. Everything is going in their favor. We're looking at the Genius Act for stable coins. You've got every single institution in this city that's putting together a stablecoin strategy. Like nobody sees the numbers that are coming out of Tether and says, hey, I couldn't use another $4 or $5 billion worth of revenue every quarter. So there's clarity coming down the pipeline. There's actual legislation that you can read today. You've got an administration that's supportive for it.
But what about the DeFi side of things?
On the DeFi side, I mean, you have a lot of good movements that are happening within the regulatory agency environment, right? Like there's a lot of great things coming out of there. You don't have tangible legislation yet. You don't have clear guidelines. You've got Fit 21. A lot of people are excited about that. Maybe coming back to Congress. It failed the first time. They want to change it. They want to bring it back to Congress, see if they can get it passed. But Fit 21 largely sidesteps the DeFi question. But for a lot of the people that I talk to, they're excited about the broker-dealer rule being struck down from the IRS. Like that was a huge attack on DeFi. That basically made it impossible to onshore any DeFi back into the United States. Them striking it down is a very clear sign that America wants to see this happen onshore. It wants to attract those entrepreneurs that have left. It wants to attract those billions of dollars that may have gone and been invested in foreign companies back in the United States. So there's a lot to get excited about. Even on the DeFi space, it's just not as tangible and not as clear.
I think, Guy, especially because I would position you more on the DeFi space, kind of, with your stablecoin, et cetera. It seems like most of your optimism, especially when you were talking, you were specifically talking about World Liberty Financial and kind of Trump's, the Trump organization actually, doing a DeFi project. Is that where more of your optimism comes, kind of from this implicit acknowledgement of DeFi rather than actually any tangible legislation that's coming out?
I think that's right. Just an acknowledgement, and I think it's just high signal when they're actually engaged to try and build something rather than sort of forget that it even exists. I think the real disconnect, though, in my mind, is actually between institutional investors or people who are coming into the space for the first time or starting to dip their toes in. You speak to those kind of people, and they're incredibly optimistic about where products are going, where the entire space is going. The real disconnect, to me, actually feels like native crypto people that you read about on Twitter. There's just a huge dislocation, I think, between their sentiment right now.
People angry on Twitter at Trump's crypto projects,
or even just prices down and that kind of stuff. And
Yeah.
just the conversations that we have with other teams who are building incredible products like these guys. I think within builders, there's just incredible optimism around the products that are actually being brought to market now, being real useful things, which I don't think was really the case many years ago. And then you speak to people who are coming into the space. It just takes a bit longer for them to actually engage in the way that we want to. And yeah, to me, that feels like the biggest disconnect, which is sort of outsiders coming in, being extremely optimistic, and some of the people who have been just sort of jaded and worn out for many years on Twitter right now. Yeah.
Gotcha. Stani, are you jaded? Well, you've been around for a long time, right? I mean, I guess specifically, going back to the Trump crypto ventures thing, do you, kind of Guy was talking a little bit about this divide, right? It's high signal for institutional investors, for larger companies to get into this realm, but also there's a backlash against it, whether it's from the crypto Twitterati, whether it's from, kind of more mainstream financial people. Do you think that backlash is warranted?
Well, the way I see it, and I kind of agree with Guy in the sense, it is a positive sentiment. And when you look, for example, at the previous administration, there wasn't extremely excitement about crypto or like blockchain as a technology. So I do think that these types of signals are, in some ways, bringing a lot of attention. And I think like.
But is it good attention?
Yeah, I mean, any attention is good because it really brings eyes into the topic, and then that creates an opportunity for everyone to form their opinion. And I think that's really what matters, in my opinion, because what, for example, what Liberty Finance is doing is probably just like a really tiny piece of what is happening in DeFi, in overall in crypto space and what's being built. I actually even think about when I just trying to figure out and think about like the long-term horizon of our space. I even think that maybe at some day the native crypto assets are going to be smaller than, for example, stablecoins. So maybe a few years from now, stablecoins are going to increase the market capitalization of more crypto native assets, and then securities in tokenized forms will even be higher in market capitalization on chain compared to stablecoins and native crypto assets. So there's a lot of happening at the moment, but it's really, there's some connectivity from government to the DeFi space, which I think is great. But also it's just a completely...
Is that just connectivity, meaning, having people in Trump's circle specifically interested in DeFi?
Yeah. I mean, that interest is quite real, and the fact that it is there, it is net positive for.
And you have Eric Trump just like DMing you and saying like, yo, like I'm having like 10% yield. No, no comment.
10% is quite a lot. But I mean, this is the problem. I mean, like 10% will be fine, but even getting people around the world, we're talking about 8 billion people, and giving them even like 2%, like 4% yield is a big thing. So the thing about DeFi is that it doesn't just touch Americans. It touches like everyone across the globe, and DeFi is just a way of creating this kind of an environment of algorithms that anyone can consume, and building it in a way that it's resilient. The fact that, for example, Aave has been able to withstand over the years with all these kind of market movements and have functional liquidations and still exist there is a really fundamental statement at the same time when the centralized lenders are basically disappearing.
One thing I just want to ask you about, Saeed, is, Stani was saying basically all attention is good attention in some ways, right? With the Trump.
Well, not exactly all, but like most of the attention.
Okay, yeah. Generally, a lot of attention is good.
Yeah,
right?
yeah.
Do you subscribe to that, or do you think that like kind of because it goes both ways, right? There's the criticisms to what's happened in the past 60 days, and there's also the attention that it has kind of got. Also, we'll move on from politics after this question.
I don't know. I think it's more interesting to like think about like why is there attention, right? Like what's behind all the attention? And I think
is it just because you have a big name, like you have Trump, right? Launching a meme coin. That of course that's going to grab attention.
Yeah, but why is Trump launching a meme coin? Like why wouldn't he do that in 2016?
I don't know. Like, do you know?
I think it's because the industry and the market, and there's been massive shifts and a lot of work that's gone in this industry to get it to a place where you can tap into extremely large markets, like mind share across the world. Like it's not even just the U.S. It's global, and I think. And anytime you do anything, you're going to have the negative attention, you're going to have the positive attention, right? But the fact that it's able to generate this much attention, I mean, and you see what Trump did, and you see other leaders doing the same thing poorly. But
Javier Millet.
yeah. So, but you see these things happening, and I think it's people are still figuring out like how do I take advantage of this technology? It's definitely a technology that is not just theory or like an academic white paper anymore. It's like if you utilize it in the right way, you can have a huge impact. You can transform your business. You can really change a lot of things that it's no longer abstract. It's real and it's happening today.
And I think kind of like jumping off that, right? Like it's no longer abstract. It's no longer something that's just a bunch of degens are doing by themselves, right? All three of you are kind of at this intersection of stablecoins and often fintechs, right? That are wanting to get into DeFi, that are wanting to get into this ecosystem because they're seeing the huge volumes, they're seeing the huge, was it Guy or was it Saeed that was saying if you get $4 to $5 billion, dollars?
Yeah, Tether.
Like, of course you want that. But the counter to that, right, is you have all these fintechs coming into crypto. Could it be taking the wind away and the momentum away and the attention away from the people who've been building the ecosystem for a long time? And I think I don't know which one of you guys want to kind of take that question and run with it.
I think we just play in different pieces of the stack. So I think when DeFi was first forming and Stani was there with some of the other OGs, it was like very much a consumer-facing piece where you're engaging with these food farms, these like ridiculously incentivized and often like unsustainable things in the beginning, which is fine. Sometimes you need like the speculation for like real things to come out on the other side. I think my view of where DeFi goes in the future is that it actually just becomes extremely boring relative to what we saw in the past, which is if we want this to actually get to the scale that all of us have sort of described for years, which is like trillions rather than like billions where it sits right now, DeFi has to sit as like more efficient back-end infrastructure to some of the front-end facing stuff that you're describing there. So I think, I think basic example here with our two products is when you have a fintech, whoever it is, can you actually, in the same way, I think Coinbase came out with something recently with another money market where the consumer's coming into a centralized front end, which can look and feel a bit like a fintech, and in the back end, you're sort of like tapping into DeFi with the efficiency, the yield, or whatever it is that you're trying to sort of gather from it. And all DeFi is doing is sort of providing a better product in the background where some sort of fintech or centralized business is sort of like overlaying that on the top. It's been a huge sort of shift for centralized exchanges in the space for many years to actually start doing that. And I think if we're talking the type of numbers that we're describing in an end state, I think DeFi is just more efficient infra in the background, which is boring for like the degens who are sitting on chain because you're saving a few basis points. It's not something where you're longing a coin to make 100x. And that's sort of maybe the divergent view of what it looks like in the future.
And I think at some point, actually, it's going to be really, it will be quite pointless to compete with DeFi because, especially when you have that initial liquidity, and I see DeFi protocols as simply algorithms of how to utilize liquidity or certain type of behavior. And DeFi is basically an open environment where everyone can come and build algorithms. So obviously, Aave has built a few of these versions, and there's always newcomers and tweaking. And you see the same thing with AMMs, automated market makers, where basically you have a better exchange algorithm, for example. So it is going to be at some point very kind of like hard to create a competing, more centralized product, and when you have this efficient infrastructure.
Do you think fintechs will just start building their own DeFi protocols, their own, having their own kind of labs and foundations, et cetera, that would supplant kind of what you three are doing right now?
I would say it's going to be less efficient because building a really good algorithm is really hard. And then once you build it, it gets very quickly commoditized. So basically, what really matters is the distribution. So what I, for example, like about what Guy's team is building is that they're essentially creating a product and using a DeFi as a way to package a strategy and then make it easy to distribute. So at some point, we'll notice that the best single way to distribute yield or any kind of financial empowerment will be through DeFi because it's borderless and it's this efficient system, and it's gonna be harder to do that in a localized level. So fintechs actually will just basically plug into the system, build the experience and additional services, and then just offer these products that are build on these DeFi algorithms.
And are we, I mean, Saeed, you're, you know, kind of Wormhole's entire thing is you work with a lot of institutions, you work with Securitize, like, you know, is it weird to talk to like banks and say like, hey, like there's this cool yield you can get on this like weird algorithm right here? Like, you know, talk to me a little bit about actually educating these kind of stuffy suits about the wild west of finance.
Well, they are definitely very interested to tap into DeFi, and they're looking for ways to do it compliantly. It's not an easy challenge. And I do agree with what Stani is saying, is that you do have like for years, everyone knows that people want 24-hour trading, people want instant settlement, people want to kind of disintermediate this daisy chain of people between the asset issuer or the company that's producing the financial product and the end user. All of these things everyone agrees with, would love to see, but they would always say, it won't happen, it can't happen, regulations won't allow it, or there's too many incumbents in place. But everyone understands that there are a lot of benefits to this technology that make things cheaper, faster, and allow for better user experiences. And I do agree with Stani that.
But the technology's been around for more than a decade at this point. So I feel like
it's gotten to a pretty good point now that now the fintechs can. They can plug into it.
Yeah, so the technology is, it's not just like, because maybe what I was getting at was that the regulatory atmosphere has made people much more willing to engage with it. But you also say
exactly.
it's a technological, like.
They have this great technology, like these great sets of technology that they can leverage. They don't because they think that it will hurt their existing businesses, right? It won't be compliant, or there's no regulatory framework or guidance or clarity on what they can and can't do. That exists today, and if things continue to progress, like they can start leveraging those things. And these are not just fintechs; these are also banks, asset managers, everyone else. Like, BUIDL just hit $1 billion in AUM. A lot of people are thinking that BlackRock is going for the crypto market, or and maybe they are, but that's not my thought process. Like, that's not what I guess they're doing, right? BlackRock, I heard a number today, was like 15 trillion in AUM.
Yeah, well,
crypto's 3 trillion. Like,
you're like 1 billion in BUIDL. Like, wow, that's cool, but it's like just a drop in the pond.
Yeah,
right?
and that's if you're looking at it from like the perspective that BlackRock is trying to capture value or grow its AUM from the crypto market or from the existing crypto participants. I take an opposite view because I'm working on infrastructure and contributing to infrastructure, right? I think what they're doing is they're testing out what are the benefits of this technology? Can I actually run these systems at scale? And are they better than the legacy systems that I currently use to interact with that massive institutional base of clients? All those people who have handed them $15 trillion worth of assets to manage. That's the exciting part, for Securitize, for Wormhole, for all the people that are working on the infrastructure side, which is like, you can call it a stress test, you can call it a pilot, but it's real money. It's real money at scale, and and they're real financial products that have their analog counterpart in TradFi, and it's just scratching the surface, right? Of like how many of those things can get tokenized on chain, and they can start to make their businesses more efficient.
I mean, I think that kind of gets into, tokenization, right? This conference is named after tokenization. It's been kind of just like a word thrown about. I think in crypto, I don't know, probably since Ethereum or even earlier. But we really haven't. I mean, yeah, $1 billion is big, but it is a drop in the water. Like, I guess Guy and Stani, because you guys are more on the protocol side, probably like actually interfacing with these banks and fintechs. Is there actually a sea change in tokenization this year, or is it still a lot of hype and a lot of just kind of like, it's going to happen, it's going to happen?
Yeah, I think I think treasuries were like the natural starting point for this entire thing.
Yeah.
I think the difference in opinion I sometimes have with like all of these things are going to come on chain and there's like demand for all of these assets in crypto is that sometimes you're making the product a lot better, and sometimes you're making it a lot worse than it actually exists in TradFi. So adding like legal risk, sometimes there's like a Cayman Foundation here, which is actually like multiplying the risk rather than like thinking about how it's additive. I think the use of like a treasury is actually just the best example here, which is when you add it into different places where it can be useful as collateral, then you really start to unlock new use cases that don't really exist in TradFi right now. I think this use of BUIDL was a great example, which is like, strategically, Securitize and the rest of the team were saying, Are there different stablecoins that actually can integrate our product in the back end, and then they're useful as collateral to trade derivatives on exchanges, to put it down as collateral in the money market or whatever it is? And I think that that's kind of like the step that we need to take, which is how do you take these financial assets but put them into formats where they're actually fundamentally more useful in crypto than they were in the normal world? And that's, I think, the question for like these other assets that come after treasuries, because that was just a very clean, simple example that you can.
What do you think is next in terms of like, would it be stocks? Would it be mortgages? Would it be like, what do you think is next thing to be tokenized that's going to actually have, I wouldn't say like product market fit, because these again are like super small, but like would actually have adoption beyond just being experiments.
Yeah, I think there's a whole world of like fixed income that like exists beyond just treasuries, and people are always chasing yield in some format somewhere. So I think different pieces of like the fixed income capital structure, I can definitely imagine coming on chain and being able to sort of integrate those into different interesting places. I think the one I'm personally most excited about is potentially sort of the legalization of perps within the US. Specifically as it relates to equities. So I think everyone obviously knows that options are like the most popular way that like retail express leverage on equities at the moment on like a Robinhood. That to me doesn't really make sense, where you have perps, which I just think is like an outright better product for that type of use case. And I think the one piece, which I think is a huge idea for someone to go and build next cycle, is how do we take single name equities and attach like a perp to it, in the same way that became sort of the killer financial product of crypto right now is sort of perp trading. I think that there's a huge opportunity there to try and build the same thing on equities. Yeah.
But I think bringing up perps and like leverage, I think is an interesting question vis-a-vis like DeFi, crypto infrastructure, and then dealing with banks and fintech, because you're talking about retail investors. So if you're introducing more risk and if you're introducing more leverage into this conversation, there's an interesting ethical question, right? Like, should we be doing that, even if there's appetite for it? And I guess like for you guys, like when you're interfacing with banks and fintechs, like I'm assuming they're thinking about these things and like thinking about these questions of like, should they even be offering these like products to people just because, even if they're illegally compliant? I don't know if Stani or Saeed have a kind of like way to go into that question. Or
yeah, I think banks are kind of like I think that obviously the tokenization is growing. Like it's happening, and it's actually nice to see that it's taking more traction now than before. And obviously the greatest example of tokenization is just stable coins like USDC. They basically are a form of tokenization and quite widespread. I think when it comes to risk, I personally think one interesting idea is to use the idea of tokenization and provide access to investors or just users for things that weren't accessible before. So there's a lot of financial opportunities that basically aren't publicly traded, as an example, exist in private markets, and tokenization might be that tool of creating liquid
why is it a tool? Just because it's you don't have to go through like OTC desks to like get access to these things?
Yeah, for me it's weird that if you want to invest as of today, you have to write paper agreements. Yeah. Maybe I'm too on chain, but I think like we need to go from like this whole. I mean, we started as like finance, writing things on clayboards, and then we went into paper, and then we went into digital. Now we're going on chain, and with all these transformations, it just becomes more efficient, and with blockchain it becomes more accessible. So I think it will be very interesting if any person, any part of the world has the same opportunity to preserve their capital as any American, and then every American has the same ability to preserve capital than someone else, other part of the world. So like equalizing these opportunities with access, and I think that's where tokenization can be extremely powerful, but create opportunities that really don't exist at the moment.
So we have like 45 seconds. So Saeed, you said, oh, this might be a good question. So maybe we can end this way. What do you think the market is not pricing in? You wanted the question to be asked.
Yeah. In the short term, I think the market is not pricing in all the things that we're talking about here today, which is the clarity that's coming from the regulatory side that's pushing institutions, fintechs, big tech, everyone to have a crypto strategy and try to leverage the technology to benefit their businesses or better serve their users. And I think that maybe that's not reflected in crypto prices, but it's certainly not reflected in the stocks of the companies that are going to benefit the most by being very proactive here. So that's the short term. I think the
Long term, 5 seconds.
long term, probably the market is not pricing in a Trump third term.
Oh. So, okay, let's end on that. Okay, well, thank you everyone for listening to us speak. I guess we'll leave on that note. And yeah, I hope you guys enjoy the next panel.